A lot of people don't really want to hear this, but you absolutely need to. Before you go FOMOing into Bitcoin at the current prices, thinking you're going to be retired, partying on IAPA next week, baby, you need to ask yourself this question. How much can I realistically make if I buy Bitcoin right now? Now, I'm not saying you shouldn't buy any Bitcoin. Having a little stash of Bitcoin definitely feels good, especially if you're involved in the crypto space, and Bitcoin's going to keep going higher. There essentially is no top to Bitcoin long term, but we're entering what could be the parabolic phase of the bull market. And if you go in with delusional expectations, you'll either panic sell too early or you'll get wrecked. Bitcoin's become a big boy asset now. The winners in this game are the ones who remain grounded in reality. So let's talk about Bitcoin's realistic growth rate from where it is today. Now, back in the early days of 2011, 2013, even 2017, Bitcoin is a beast. Multiple 100% plus years were normal. And it made sense at the time. Bitcoin was tiny, was way more volatile than it is right now. It was ignored by institutions, ignored by corporations, ignored by billionaire whales. But everything changed in 2020. That's when Bitcoin started to get institutionalized. MicroStrategy, Tesla, hedge funds, sovereign wealth funds started showing up in the market. Oh, sure, just a few, but they were the early movers. They were signaling there's a major change coming, and more capital in the market meant a bigger market cap, which means less volatility, which leads to low returns. After 2020, Bitcoin's compound annual growth rate, or CAGR, dropped from over 100% to around 30 to 40%. It's the same reason early stage startups can do a 10x, but Apple stock, for example, now isn't going to do a 10x, at least not in our lifetimes probably. When you go from a few billion to over $1 trillion of market cap, guess what? The rocket ship slows down. Bitcoin stopped trading like a tech bro gamble and started trading more like a legit macro asset class, because that's what it is. It's right up there with gold and bonds and stocks now. And with the launch of the spot ETFs, that shift became undeniable. So what's that mean for future returns? Well, that's a good question. We're going to get into that in just a second. But before we do, if you're buying Bitcoin, trading Ethereum, trading Solana, you want to long the rips, you want to short the dips, you need a good place to do it at. That place is called BitUnix. It's one of the best exchanges out there, one of the hottest exchanges in crypto right now, where I'm doing most of my cryptocurrency trading. And if you want to get on board the BitUnix train, guess what? You can trade from anywhere in the world. No KYC, no VPN, no BS. All you have to do is sign up, trade, have a good time. It's that simple. Use the link down below and you will exclusively get some sweet bonuses. $10 for free to start your account, $400 in deposit bonus. You deposit $1,000, you get $200 back. You deposit $2,000, you get $400 back. It's pretty crazy. And $2,000 in trading bonuses, which is nuts. Link down below. Go check it out. Okay, so the future price of Bitcoin. Now, according to on-chain analyst Willy Woo, Bitcoin's long-term CAGR is trending downward to 8% a year. And that lines up with the macro picture. The long-term monetary expansion is around 5%. Global GDP growth is around 3%. Add them together, an 8% CAGR is a reasonable growth rate for a long-term store of value like Bitcoin. But there's no need to throw in the towel just yet. You see, that's where we're likely heading over the next 15 to 20 years as the network continues to mature. So the Moon Boy days are definitely fading, but by no means does this mean you shouldn't buy any Bitcoin ever again or have zero exposure to the asset class. It's still smarter and more scarce than gold. If you are a gold buyer, you like the gold narrative, why the hell wouldn't you own Bitcoin? So even if Bitcoin's only going to return 15% annually over the next 10 years, which is totally possible during the final asymmetric phase of the asset class when it becomes like a big daddy boring asset after that, well, let me show you what that looks like. So $10,000 of Bitcoin today, growing at 15% a year, will be worth $455 in 10 years, $163,665 in 20 years. Now compare that to the S&P 500, which averages around 8 to 10%, or bonds hover around 5% or less. Even if Bitcoin's returns are eroding, no other asset class comes close when you zoom out. And that's without staking, without lending, nothing fancy, just straight up buy Bitcoin, dump it in your sweet hardware wallet, and hold it. That's it. Now that brings us up to the big shift happening right now as well, because while the retail crowd has been chasing meme coins and selling their Bitcoin to gamble, the institutions are quietly positioning themselves for the long game. Case in point, Fidelity just dropped a bomb. Boom! Fidelity's director of global macro just said Bitcoin is ready to carry gold's baton. That's because Bitcoin's Sharpe ratio, which is how much return you get for the risk you take, is now lining up with gold. And that's huge because it's valued at 1/10 the market cap of gold, okay? It means Bitcoin's not just some volatile, crazy beast for cool kids anymore. It's earning its stripes as a serious store of value asset. And while gold outperformed Bitcoin in Q1 due to recession fears, Bitcoin's had a V-shaped recovery since Trump's Liberation Day, outperforming gold, of course. Bitcoin ETF flows bounced back hard. Now, some models are forecasting a Bitcoin price of $200,000 to $400,000 this cycle. You know, we've been in the sort of camp of $250,000 Bitcoin. It's a pico top price. Wouldn't be shocked by a little bit higher, but that's a pretty good estimate. But that's at least double from here, based on Bitcoin's network valuation catching up to gold. So let me put you a bit of perspective here. There's over $2 quadrillion invested in global assets, real estate, stocks, bonds, cash, collectibles, et cetera, et cetera, et cetera. But only $2 trillion of that is in Bitcoin. That's 0.2%. And people are still out here saying it's too late to buy. Well, we're not early anymore, and you need to keep your expectations realistic. But we're definitely also not super late. We're not buying at a $20 trillion market cap, right? But this is what happens when an asset goes from internet experiment to macro heavyweight. It's gone from zero to something. But the runway ahead is still massive if it captures even a fraction of the money locked in traditional assets. And that's before the money printers go burr and more new money is added into the game, which of course is going to happen. So should you buy Bitcoin today? Well, if you're looking for fast money, no. If you're looking to build long-term wealth over the next decade or two and you want to consistently dollar cost average in and not think about the day-to-day price fluctuations, then Bitcoin's one of the best asymmetric bets that you can make. There's way more upside than there is downside to Bitcoin. We're not at equilibrium yet. Bitcoin is still absorbing capital. Institutional adoption is not over. Sovereign adoption is barely getting started. The next 5 to 10 years are likely the final window to lock in those 15 to 20% CAGR style gains. After that, the rocket becomes a freight train. Still powerful, still unstoppable, but a hell of a lot slower, more steady, less dramatic, like gold. So how much can you realistically make by buying Bitcoin right now? You're probably not going to 100x your money, at least not in your lifetime. But you still may get a nice 10x over the next decade from the price of 100K-ish to $1 million. You just need to zoom out and be patient because there's no other publicly investable asset that has the ability to give you that same kind of upside with store of value properties. Bitcoin's evolving. The question is, can you evolve your mindset with it? Forget the moon boy bullshit, okay? Focus on the long-term wealth for the future, holding gold, but at 1/10 the market cap. And we're going to catch up to it. And the catch-up trade is what you're looking at over the next 10 years. Thanks for watching.